Copy trading is a form of investment where individuals automatically replicate the trades of experienced investors. This process typically involves selecting a trader to follow on a specialized platform, after which the chosen trader's buy and sell decisions are mirrored in the follower's account. The appeal of copy trading lies in its simplicity and accessibility, allowing even those with limited market knowledge to participate in financial markets. As technology has advanced, these platforms have become more user-friendly and transparent, further boosting their popularity. Many investors are drawn to copy trading because it offers a way to potentially benefit from the expertise of professionals while minimizing the need for constant market monitoring. The growing sense of community and shared learning also contributes to its widespread adoption. Copy trading offers several notable advantages for investors. By following experienced traders, users gain access to expert knowledge and strategies that might otherwise take years to learn. This approach also saves significant time, as individuals do not need to conduct extensive market research or monitor trades constantly. For beginners, copy trading provides a practical entry point into financial markets, reducing the complexity and risk often associated with independent trading. Overall, it streamlines the investment process and helps users make informed decisions with greater confidence. Copy trading may seem convenient, but it carries several hidden risks. By relying on another trader's decisions, you give up direct control over your investments. This dependency means that any mistake or poor judgment by the person you follow can directly impact your financial results. Additionally, you may not fully understand the strategies being used, which can lead to unexpected losses. The lack of personal oversight increases the risk of significant financial setbacks. It is important to recognize these potential dangers before engaging in copy trading. Before participating in copy trading, several important factors should be considered. Selecting a reputable trader is crucial, as their reliability directly impacts your investment outcomes. It is also essential to understand the trader's strategy, including their risk management approach and decision-making process. Reviewing the trader's transaction history provides valuable insights into their consistency and performance over time. By carefully evaluating these aspects, you can make more informed choices and reduce potential risks associated with copy trading. Copy trading differs significantly from traditional investment methods in several key aspects. With copy trading, investors can automatically replicate the strategies of experienced traders, reducing the need for active decision-making and extensive market research. In contrast, traditional investing often requires a higher level of personal involvement, including analyzing financial data and making independent choices. Knowledge requirements also vary. Copy trading allows individuals with limited expertise to participate, while traditional investing typically demands a deeper understanding of markets and financial instruments. Risk management is another area of distinction. Copy trading platforms may offer built-in tools to help manage exposure, but investors still rely on the skills of the traders they follow. Traditional investors, on the other hand, must develop and implement their own risk management strategies. Copy trading has produced a range of outcomes, from remarkable successes to notable failures. Some investors have achieved significant profits by following skilled traders with proven track records, benefiting from their expertise and timely decisions. However, there are also cases where copy traders suffered losses, often due to blindly following strategies without understanding the risks involved or failing to diversify their portfolios. These real-world examples highlight the importance of thorough research and ongoing monitoring when engaging in copy trading. Learning from both the triumphs and setbacks of others can help individuals make more informed choices and avoid common pitfalls. Ultimately, success in copy trading depends on careful selection of traders, risk management, and a willingness to adapt strategies as market conditions change. In summary, copy trading offers a convenient way for individuals to participate in financial markets by mirroring the strategies of experienced traders. It can be especially appealing for beginners or those with limited time to analyze the markets themselves. However, it is important to remember that copy trading carries risks, and past performance does not guarantee future results. Carefully research the traders you choose to follow, understand the platform's features, and only invest amounts you can afford to lose. Ultimately, whether copy trading is a good choice depends on your financial goals, risk tolerance, and willingness to stay informed. Take the time to evaluate if this approach aligns with your personal investment strategy.